Have you ever wondered how to make your money work for you? Well, investing in the stock market, especially dividend stocks, is a great way to generate passive income and achieve your financial goals. In this video, we focus on blue chips, some of the most popular stocks on the market. We'll discuss what they are, why they're important, and how they can help you diversify your portfolio and grow your wealth over time. But before we dive into it, make sure you hit the subscribe button and turn on the notification bell so you don't miss out on our latest investing tips and strategies. Let's start. Blue chip stocks are established companies with a long track record of solid earnings, strong financials, and a solid reputation in their respective industries. They are usually large-cap stocks, meaning they have a market cap of more than $10 billion. Blue chips are often household names with decades of popularity that have been built over decades, and they often pay shareholders regular dividends, making them popular choices for income investors. Here are some examples of blue chip stocks. Apple Incorporated AAPL, Microsoft Corporation MSFT, Johnson & Johnson J&J, Coca-Cola Company KO, Procter & Gamble Company PG. Investors are attracted to blue chips because they are considered relatively safe investments compared to other stocks. Blue chip stocks tend to perform well over time due to their long-term success and stability, and their dividend payments can provide investors with a steady stream of income. In addition, blue chips are generally less volatile than smaller or lesser-known companies, which can help reduce risk in an investor's portfolio. Blue chip stocks are stocks of large, established, financially stable companies that have been in the market for a long time. The term blue chip comes from the game of poker, in which a blue chip has the highest value. On Wall Street, a blue chip stock is usually a well-known and valued company with characteristics that benefit long-term investors, such as higher dividend yield. Typically, the best blue chip stocks have higher dividend yields than other stock classes with similar levels of risk. That's because these companies have solid earnings and strong cash flow. Reliable dividend payments. Many blue chip stocks pay regular dividends to their shareholders, providing a stable source of income for investors. These dividend payments can be particularly attractive to retirees or other investors looking to generate income without having to sell their shares. Stability and reliability. Blue chip stocks tend to be established companies with a long track record of success and stability. This means they are generally less volatile than smaller or lesser-known companies, making them a relatively safe investment compared to other stocks. Diversification. Blue chip stocks can help diversify an investor's portfolio by providing exposure to a variety of industries and sectors. This can help reduce portfolio risk and volatility. Blue chip stocks are attractive to income-oriented investors because they tend to have a consistent history of dividend payments. These dividends can provide a steady stream of income to investors, especially if the dividends are reinvested to buy more shares. Over time, this can lead to significant growth in the investor's portfolio. By investing in blue chip stocks from different industries and sectors, investors can diversify their portfolio and reduce risk. For example, an investor who owns shares of Apple, Microsoft, and Johnson & Johnson is not overly exposed to any one sector or industry. If one of these companies were to fail, the impact on the investor's overall portfolio would be less severe than if he or she had invested in a single company or industry. In most cases, blue chip stocks are a good investment. Blue chip stocks tend to be more stable and reliable investments than smaller companies, with benefits such as regular dividend payments, market presence, and cash flow. They can also help you diversify your portfolio and reduce the risks associated with investing in a single stock. However, these stocks are generally more expensive and may have less long-term growth potential than those issued by smaller companies. And remember that they are always subject to volatility. Your dividends may not be guaranteed, and investing too much in blue chips could lead to a lack of diversification. Weigh the pros and cons carefully before making the decision to invest in a blue chip. In general, blue chip stocks can be a good investment if you are looking for stability and steady income. They offer benefits that may be attractive if you are a long-term investor, such as liquidity, capital appreciation, and diversification. However, blue chip stocks are subject to market volatility. They can be expensive and have less growth potential than small businesses. But when investing in blue chip stocks, it is important to consider a number of factors before making any investment decision. One of the most important is to investigate the financial health of the business. This means looking at factors such as the company's revenue, profits, and cash flow, as well as its level of debt and overall financial stability. In addition, investors should also pay close attention to the company's dividend payout. The payout ratio, which is the percentage of earnings paid out as dividends, is an important parameter to consider. A high payout ratio may indicate that the company is paying out an excessive share of its profits in the form of dividends, which could be a sign of financial weakness. Another important metric is the dividend yield, which is the amount of dividends paid each year relative to the stock price. A high dividend yield can be attractive to income-oriented investors, but it's also important to consider the overall financial health of the company and its ability to sustain dividend payments. Before we continue with the rest of the video, I wanted to take a quick moment to remind you to hit that like button if you are finding this content helpful. And if you have not yet, do not forget to smash that subscribe button and turn on notifications so you never miss out on our coming videos. Your support means the world to us and helps us continue creating high-quality content just like this. Alright, now let's dive back into the world of blue-chip stocks and explore some of the possible risks you should keep in mind as an investor. As we've discussed, blue chips have many benefits, but they also have risks that investors should consider. One risk is potential stagnation, which could lead to underperformance relative to smaller companies with higher growth potential. Additionally, blue-chip companies struggling to innovate and keep up with changing market trends may experience stagnant growth. Another risk associated with blue chips is the possibility of dividend cuts or trading suspensions. Recessions or changes in a company's financial condition can affect the consistency of dividend payments, which can adversely affect investors who rely on that income. Also, while blue chips are considered relatively stable, they are not immune to market volatility. Even established companies experience price fluctuations due to unexpected changes in the company, economic events, or political developments. Therefore, it is important for investors to conduct in-depth research when investing in blue-chip stocks, carefully consider these risks, and take steps to mitigate them. Diversifying your portfolio and investing for the long term can help mitigate the potential risks associated with investing in blue-chip stocks. Additionally, investors should pay attention to key metrics such as payout ratio, dividend yield, and dividend growth rate when selecting blue chips for their portfolio. By considering these factors and keeping abreast of the risks associated with blue chip stocks, investors can make informed decisions and achieve their financial goals. In conclusion, blue chip stocks offer a number of benefits for investors looking to induce steady income through tip investing. By investing in well-established companies with a strong track record of harmonious tip payments, investors can make a diversified portfolio that provides long-term wealth growth. Still, it's important to flash back that investing in blue-chip stocks does come with some pitfalls, similar as the eventuality for recession, tip cuts or suspense, and request volatility. It's important for investors to conduct thorough exploration and precisely consider these pitfalls before making any investment opinions. We hope that this videotape has handed you with precious perceptivity into tip investing and the benefits of blue chip stocks. So, please consider supporting our channel by liking and commenting it if you found this content helpful. Your support helps us continue to produce high-quality content that educates and empowers investors like you. Thank you for watching.